Hello friends, today with the help of this PowerPoint presentation, I am going to discuss with you the topic of technical analysis. As we know that there are three approaches of security analysis, namely fundamental analysis, technical analysis and efficient market hypothesis. Right? So the method which are used to analyze the securities and make the investment decisions, they fall into the two broad categories, that is fundamental analysis and technical analysis. And in fundamental analysis we have already covered the concept of economic analysis, industrial analysis and company analysis. Technical analysis is not a substitute, but it is used as a supplement to the fundamental analysis, right? So the question arises what the technical analysis is. So according to technical analysis, the price of stock depends on the demand and supply in the marketplace and has very less correlation with intrinsic value. The concept of intrinsic value has already been discussed. That is, if the intrinsic value is more than market price, then we will buy the security. If the intrinsic value is less than market price, then we sell the security. And if the both are equal, then no action is taken. It is basically the study of markets and markets only. And the technical analysts study the technical characteristics and objective assessment. Now, the technical characteristics means that what are the technical characteristics of previous turning points. Now, previous turning point means when the market will go up and comes down due to any reason. It may be due to inflation or deflation. And the other thing is objective assessment. It is by keeping in mind the objective of individual investor, assessment of securities can be done. Technical analysis is a method of evaluating securities by analyzing the statistics generated by market activity. Statistics can be related to the quantity of securities purchased in the past or the price of stock, etc. Instead of using the intrinsic value of securities, technical analysis includes charts and other tools in order to judge the patterns or the movements of the stock. The charts and other tools we'll cover later in this chapter. Technical analysis is directed toward predicting the price of security. Price here means the price which is decided by both buyer and seller mutually, while keeping in mind the various factors, that is rational, irrational, or quantifiable and non-quantifiable, and this figure is considered as the final figure. So we can say that the technical analysis provides a simplified and comprehensive picture of what is happening to the price of security in the market. Next, we are going to cover the assumption of technical analysis. So the first assumption here is interaction of demand and supply. The market value of security is solely determined by the interaction of demand and supply factors that are operating in the market. Demand and supply are surrounded by various factors. The factors can be both rational as well as irrational and quantifiable as well as non-quantifiable. Security prices moves in trend. Trend here can be the upward trend as well as downward trend, and it all depends on the psychology, sentiments, mood and emotions of the operators. Influence of past trends. One can predict the present trends on the basis of past because we know that history repeats itself. Prices moves in trends for a particular length of time, but exceptions are always there, and we assume that minor variation can take place. Trend changes due to change in demand and supply, because whenever there is shift in the demand and supply factors, there is change in the trend in the market. Changes in demand and supply can be predicted through charts, because charts are made specifically to show the change in market actions. Some charts trends tend to repeat themselves. As discussed earlier, that history repeats itself, so we can easily predict from charts the patterns about the movement of price. These patterns are used by the technical analyst to forecast the future patterns. So we can conclude the assumptions by saying that the market discounts everything. That is, the technician believes that anything can affect the price, fundamentally, politically, psychologically, or otherwise. So it is the study of price that is all required. Let us take an example of demand and supply. Now, if the demand exceeds supply, prices should rise. And if supply exceeds demand, then the prices should fall. This action is the basis for all the forecasting. Now see how this concept can be used in technical analysis. Now if the prices are rising for whatever reasons, demand must exceed supply and the fundamentals must be bullish. And if prices fall, the fundamentals must be bearish. So the technician is claiming that price action should reflect shift in demand as well as supply. Next is the price moves in trend. While doing the technical analysis, the whole purpose of charting the price action of a market is to identify the trends in past, which can be used in future for the purpose of trading for development, and the amount can be invested in the direction of those past trends. In fact, most of the techniques used in this approach are trend following. Here, trend following means that they have to identify and follow the existing trends. The third and the main thing is that the history tends to repeat itself. It is rightly said that the key to understanding the future lies in the study of the past, or that the future is just a repetition of the past. The market considers the human psychology. The past trend shows either the bullish trend or the bearish trend. So the next topic to be covered here is the tools and techniques of technical analysis. As we know that there are numerous tools and techniques for doing technical analysis, but for the purpose of doing analysis, the four important points should be kept in mind. So the first point here is price. Price is considered as one of the biggest factors that must be examined by every technical analyst. In fact, price action is considered as a primary measure while conducting the technical analysis, and the technical analyst start by examining the chart that shows a security price, because it will reflect, if there is change in the price, then it can be reflected easily in the attitude of investor, and that ultimately can be shown in the change in demand and supply of that particular security. Next is time. So it states that change in price is due to time. According to technical analysts, the longer the time for the change in trend of a security results in greater the change in price. Volume. This is another major factor used in technical analysis. Volume is simply the number of shares that can be traded over a period of time, which is generally 1 day. Shares does not mean specifically shares, it can be any security also. For technical analysis, looking at the volume of stock or security can help the analyst to determine the strength of a price. That is, whether the price of that particular security is going up or down. Like we say, if more shares are purchased, that it must be accompanied by increase in price, and vice versa. And normally in technical analysis charts, volume is expressed as a bar chart. The higher the bar, the higher will be the trading volume. Width. price of security can change due to numerous reasons. It can change due to change in trend in various sectors or due to change in few sectors, right? So the study of width of a market indicates the extent to which the price changes in the market is in accordance with the overall change in trend. The concept of technical analysis can be clear with the help of example which is given here. Like you say that if any person want to invest in the market, then he must first select the stock. So while conducting the technical analysis, the first thing the person will do is to pick a stock or a security which he wants to examine, for which in which he wants to invest the money. For example, in this example, I have taken the stock of Apple. Like I say that an investor could use technical analysis on a stock of Apple. And the chart shows the trend of Apple, and in this you see that there we have a black line and we have a bar graphs, or sorry, it's red and green bars, which shows the trading volume, and the black line will show the price pattern. Now you can see here that the price is going down and then it is rising, and you can also see that there is variation in the red and green bars, that is the variation volume of the stock being traded in the market. Now you can easily predict from this chart that whether the investor wants to invest in the stock that can be for short term or for long term, and what is the stock short term trend, whether it will go upward, downward, or sideways. Now this way an analyst can easily be able to judge and make a decision for the investment in the Apple stock.